Okay, peace and blessings, folks. Welcome to another
Oh,
episode of the Prolific Perspective Podcast. Today, I have a very special guest. She is the founder of Hidden Values Bookkeeping, and her name is Miss Lakeisha Scott. What's up, Miss Lakeisha? How you doing? It's a pleasure to meet you. To have you
hello.
on.
How are you?
I'm doing
Thank you
pretty
for having
good.
me on.
Absolutely, absolutely. It's an honor and a pleasure, man. I really do. I appreciate you taking the time to come.
Filthy.
Let's dive into this real estate thing, man, because like I said, when I was
Yeah.
I was blown away. It was funny because I recall like it was yesterday. I remember asking, I don't know how many questions I asked because I'm just like,
Mhm.
I'm like you. I read a lot, I study a lot, I listen to a lot of business and personal development podcasts. Like I'm all about growth, and I'm all about challenging myself, to learn and to just grow and to try to, be successful, in all aspects of life. But it takes work to do that, and it takes learning and being willing to invest, the time and the sweat and equity into, reading and studying and just being coachable and being someone willing to always commit to continuous learning. And so I've
Yes.
studied real estate. I've studied so many different business models and different businesses and, several, Fortune 500 business owner, all that stuff. I just love, business. And I love learning. So anywho, real estate and a whole, I've learned and studied a lot about, but the lane that you spoke about was something I have never heard of. It was like almost like
A lot
somebody
of people
speaking
don't
another
know.
language from another planet. I'm still blown away by it. So can you kind of get into this particular niche in the real estate
Yeah.
industry, kind of share, how you got into it and just give us, a breakdown on how this opportunity works.
Sure. Okay. So this business, the real estate business, is the business I was telling you that I started when I found out I was having my first daughter. And now, mind you, I did not know I knew about real estate. I didn't know about this portion of real estate. I just so happened to be up one night, uncomfortable, ready to give birth. And I was like, okay, I saw the commercial where they were talking about, the mortgage notes. And I'm thinking, mortgage, I don't understand,
Mhm.
so I bought the book, me being a reader.
Right.
I bought the book and I learned it. So it's about seller finance notes. And some may know about seller finance notes, but the ones that don't know, that is where you have a house that you're selling, and how typically you would send money or your monthly payments to a bank, you're actually sending it to an individual. The
Mhm.
individual is saying that they'll sell their house to you or sell a house that they own to you, and you just pay them. Okay, this seller finance, they're going to finance it for you. Okay, meaning it's kind of a favor, if you will.
Mhm.
Okay, for them to say, instead of you going through that rigorous, credit, approval process with a bank, you'll do it with me. Okay, either they still have a note on or a underlying lien on that house,
Mhm.
and they'll pay wrapping the mortgage, or they may own it free and clear. It may be either one of those, but you may send those payments to your lender, who is a person, a single person. In this industry, which is typically bought and sold on the secondary mortgage market, the primary mortgage market is dealing with Regions, dealing with Bank of America, dealing with, Wells Fargo, as long as they're going to last. But the secondary mortgage market, you're dealing with more investors than anything. Okay, and private investors can be a company, but they're still investors. But on the secondary mortgage market, these are investors that are saying that they know that there's great value in those notes.
Mhm.
So let's just say the monthly payment, I'm going to do my calculator because it makes it so much easier to explain.
And I'm
All
taking
right, so
I mean looking down
okay,
because like I said, I want to learn more about
okay, so $100,000 note. Okay, they're going to let you get the house for 100,000. All right, let's just say 360 payments. The average person does 30 years, and the interest rate is 8%. So your monthly payment is 733.76.
Mhm.
Okay. That amount is being received by, or you're paying. I'm gonna say I'm the one that's providing the mortgage. So you're paying me 733.76 every month.
Mhm.
But let's just say something comes up. I have a child going to college, or I'm gonna buy my child a car, or I'm just tired of the 733 trickling in every month. I'd rather get the whole lump sum.
Mhm.
Okay. So the lump sum, and to make it easy, is at 100,000. Okay. So let's just say you have that note 100,000, you don't want the 733. There are investors on the secondary mortgage market that will buy that note from you, not the house, the mortgage.
Wow.
Okay, so where I would typically be the one to receive the 733.76, I can say, you know what, reach out to, someone, one of the asset managers or the investors on the secondary mortgage market. They will say, yes, I will, buy that note from you. Now, mind you, I gave it an 8% interest rate.
Mm-hmm.
For them, they have a certain yield they want to earn, meaning on top of the 8%. So they may say, okay, you're receiving 733.76 for a $100,000 note. That's kind of conservative. I was looking more of 11%, return. So they want, 3 more points on top of that.
Mm-hmm.
Okay, so we're going to change that 8% to 11%. Now that note is $77,049.94 at 11% interest. Now, the 100,000 is still 100,000. That investor is saying, I will send you 77,000 for me to receive, and you'll get 77,000 in lump sum cash. And I will take over receiving the 733 every month. Because what I'm saying is I'm going to take what we call time value of money. Okay, $1 today is more than $1 tomorrow. So since it's so much time, 30 years for you to receive all of your 733, they're saying, I got 30 years. You don't want to wait 30, I'll wait 30. Right. Okay, so they will give you 77,000. The note will convert over to them, and they just start receiving the payment where you are now out of the game. You have 77,000 in your bank, and you no longer have to, deal with that monthly payment that you no longer want. Now, you did just take a discount. You sold it at a discount. You took a $23,000 discount. But you're looking at 23,000, and this is the way I always pose it: $23,000 over 360 payments. So you really just took a discount of $63.89 per payment. The only thing you did is that it was all in one lump sum, that 23,000. Okay, so what it is just in the secondary mortgage market is I was the liaison between the note holder, the person selling the note, and the investor. So the investor, I find someone that has a note, they want to sell their note, they contact me. I get all the information about that note. I talk to an investor that I know based on their yield, how much they want to earn. They tell me how much they're willing to pay. I go back to the note holder and let them know, your $100,000 note, we can pay you 90 cents on the dollar, which is 90,000. Right. Or we can pay you 88 cents on the dollar, 88,000. And depending on their motivation, 9 times out of 10, they will take that discount, because you're looking at, once they see the discount is really $63 per remaining payment, as opposed to the full 23,000. Okay, they can work with that, but it also allows them to go ahead and pay for their college tuition like they need to. If they have to have surgery, they can pay for that surgery. If some of them were people that were just getting older, and they said, I can't keep maintaining these different, properties. Right. I want to go ahead and sell. So that's what it was. And I did that for 13 years. Wow. And it was the best. It's an untapped market. There's still a lot of people, kind of like you. When I mention it, they know not what I'm talking about. Right. So that lets you know it's truly an billion-dollar untapped market.
That is unbelievable. Yes. So so I'm gonna ask questions from both sides, from an investor standpoint and as the business owner, but I'll start with the business owner. So from a business owner's perspective, let's say that, from the homeowner's perspective, let's say that I wanted to sell you the note on the home that I'm living in now, right? Let's just say, give or take, the mortgage, the remaining balance is $200,000. So if I sold you that note and you gave me the lump sum for the discounted price, how do I still have to pay monthly towards that note, or how does the note just go away, or what happens with the note from the homeowner's viewpoint or perspective?
Okay, so great question. So if it is put it this way, in many of these notes that we sold, someone is living in that house, right, because they're the one making that payment. Right. But that's why we're saying we're not selling the house. The house remains as is. Everything, every stipulation, every interest payment, all that remains the same. The only thing that changes is who they make the payment to. So instead of me them continue to make the payment to the person that used to own the note.
Right.
Now they're paying the investor. So,
Gotcha.
you know, when you start that contract, you can't change the terms without that buyer agreeing. So we're not changing terms.
Gotcha.
We're telling them we're going to buy it from you at a discount. Okay, now to take it further, let's just say that note holder does have a balance. If the amount that we're offering that note seller does not outweigh what that balance is, we can't do the deal. Okay, so we can't even do a wraparound mortgage. The only time we can wrap that mortgage is if that wrap is larger than what you owe. Okay, because if that's the case, then we're picking up on a loan that we don't want. You know, when we're trying to buy this note from you, we're buying it from you free and clear. We don't want to know that there's underlying liens unless it is a lien that we know at closing we're going to pay. So it could be a tax lien, 10,000, we'll take care of it. You know, it could be a property tax lien, we'll take care of it. But when we go through title will let us know whether that house is paid for or not, what the amount is, or if there's any other clouds on that title, we'll figure it out before we close. And then that can make or break the deal. But if it's a small amount, we just let you know, we're going to take that out of your proceeds, right? Okay, as long as you know, we're good. You know, and 9 times out of 10, they don't care, you know, because they don't see it anyway, you know?
That is crazy. So now it clicks, because the other day, a couple weeks ago, I was just trying so hard to wrap my head around it, but there was so much going on at the event, you know, so many different people mixing and mingling and moving around. It was kind of hard for me to focus because it was new, and then it was like so anywho, so I get it. So now I'm looking at, because this happened with me with my home several times. They would change lenders or change whoever I was making my payments to. But now it makes sense. So now what it sounds like to me, so let's just say, I'm gonna hypothetically throw a theory out there. My home was financed through Bank of America. And so now, when an investor comes in and we make this transaction happen and this deal goes through, I'm no longer paying the mortgage to Bank of America because Jay-Z came in with Roc Nation and they bought the note. And now I'm paying the note to Roc Nation and Jay-Z, but I'm still paying the note, but it's just, I was able to get out of the note that I was paying previously to Bank of America.
Right. That's it.
Okay.
That's it. You just change who you're paying. That's it. And you brought up something too, I wanted to also bring up that 5 to 7 years, across the board, you'll notice 5 to 7 years. Anybody that has a mortgage, within 5 to 7 years, you're going to receive that letter that says Bank of America is no longer your lender. It's XYZ. If it's a no name that you don't really, recognize, typically they sold on the secondary mortgage market. They pull all those loans together and they sell them off because that's their break-even point. That's when they've really made some money off of your mortgage. They just hand it over to somebody else. And even on the secondary mortgage market, you will even find that it will switch again in maybe 2, 3, or 4 years. All investors are looking for is one, what is that break-even point? At what point, based on what I paid into this mortgage or to buy this investment, when have I broken even and when can I say I'm now actually generating revenue? Gotcha. After they've generated revenue over a certain amount of time, they're going to pass it on to somebody else, especially if it gets to a point that they start noticing that those payments are slowing down. Meaning the person that's paying, that buyer that's paying, maybe they've been late 3 or 4 times. That's a clear indicator that some type of financial issue is going on, especially if I've crossed over that break-even threshold. Yeah, I'm going to be ready to sell it. Wow. And I'm going to sell it, not just because I don't want to get stuck with something that I'm not going to pay for, but if you've been late 5 or 6 times over several years, nobody's going to gawk at that. But the more I let you continue to be late, the less of my notice worth. So I'm gonna make sure I get rid of it so it doesn't affect me. So it's always a game. It's always, I'm telling you, it's always a game. You just gotta know the rules, play it.
It is dope. I can't wait to chop this up and share clips and pieces of it. But like I said, it really is resonating with me now. So now I really get it. So now the question that I'm gonna ask, I kind of think I know the answer, but I'm gonna pose the question anyway. So from the investor's perspective, I look at it now as if I can pretty much go out here and buy rental properties and receive my rent, my passive income, my passive cash flowing income without the headache of maintenance, without having to worry about plumbing, without roofing, without having to deal with anything that's attached to this asset. All I'm doing is collecting my coins and collecting my check every month. month after month without none of the headaches of tenants, without a property manager, without any of that. I'm just collecting my coins. Is that how it works for the investor?
That's beautiful. And you are I kid you not, I'm not saying this because I'm on this wonderful podcast. You are the first person that caught on to that approach. When you talk about the notes to someone, they're still trying to wrap their brain around the concept of the note, that they don't realize, I'm telling you, all these people out there renting, not renting, but providing rental properties, but you're having to, fix toilets, something else broke. Why even go through that? Do a seller finance, create that note for them. And if anything should come up, sell the note. But you can still, and then you're looking at rent. Yes, you have the ability to raise every year according to how the market is going. Right. But you're talking about the difference between setting a note up or setting a property up and having them pay, let's say $1,500 every month. And that's the flat amount that you receive, as opposed to saying, I'm going to sell you this property, $100,000, 10% interest. Okay. And yes, that means there's a fixed amount they pay every month, but you're receiving interest payments on top of what they're going to have to pay. Do you see what I'm saying? Oh, yeah. And then you also eliminate going to go fix toilets and someone calling you in the middle of the night and the air stopped working and the roof leaks. No, let them handle that. Create that note. You can still be what they consider to be a landlord or an investor. You'll just be a much more savvy investor. And you won't be as busy because you're not having to travel to properties and make sure the lawn is cut. Or say, hey, this is homeowners association, and if the grass should be lowered, and you don't have to do that because now that property belongs to them. And if anything goes wrong and they don't pay, you get your property back. Man. Do you see what I'm saying?
I love it. Look, I love it. Like that's the wow. That's the jewel of the day. And that's the jewel of the year.
Let me tell you where I've made majority of my money though in real estate when it came to those notes. Mobile homes. Let me tell you, if you go to a mobile home park and you talk to the owner of that mobile home park and you just say, hey, I buy and sell, mortgage notes, and I notice that you have, a couple of empty lots, or you have some mobile homes, depending on what the setup is. What would you do, or what could we, type of relationship could we establish that when you have someone move out of a mobile home, I'll pay the lot rent. Just let them know that I will buy their mobile home from them. You go and do an inspection on the mobile home. Let's just say you pay them, say $5,000, $7,000, depending on how old the mobile home is. It could be $10,000. You buy that from them and you say, okay, hey, I'm gonna go ahead and get this from you. You have someone that knows how to fix it up in little skirt and stuff, make it where it's presentable. But then you turn around and that manager of the mobile home wants somebody in there. So people are going to constantly come to them to say, hey, do you have any lots? Do you have any mobile homes? You're who they're going to call. You're going to be the best answer to mobile homes. Okay. They call you and they say, hey, I want to get this mobile home right here. The mobile home owner, the manager says that you provide these mobile homes. How much does it cost me? How much can you afford to pay a month? That's the question you ask them. Think about it. Most people, the average person, they don't ever ask you about the interest rate because they don't understand what the interest rate means to that payment. Right. What you do is say, you already have in your head how much you're going to sell for. Let's say I'm going to sell it for $15,000. And they say the only thing they can afford is $500. Okay, let's do the math. All right. Well, I can only afford to pay $500 a month. Cool, no problem. All right. So then you go in and put 500. All right, and say you want to set the payment or the interest rate at. I'm sorry.
No, take your time. There's a little class in the session. I'm saying that.
Let's say at 10%. You're going to set the interest rate at 10%, and you're going to set it a little higher because with seller finance notes, you are providing a you're keeping them from having to deal with all that stringent process of being approved by a bank. Okay, so 10% a little higher than the norm. All right, and let's just say we want to do it for 180 months. Okay. What they don't know is that you probably can't see it, but $500 they pay every month, 10%. At 180 payments, you end up netting $46,000. You paid $10,000, But that was only because of that question or that you asked them, how much can you afford? They don't ever say, so what's the interest rate on that? Oh, you can afford 500? I can get you in there for 500. You can go ahead and write up that contract, let them know, here's your first pay, blah, blah, blah. You make sure everything's done with that mobile home, allow them to move in. You can even say, hey, 10% down or 5% down, so there's some skin in the game. You think that that manager or the owner of that mobile home company won't keep having people come to you? Because not only did you make sure that they can continue to receive that lot rent while you were trying to find somebody, you now have somebody that's in there. There's not any empty locations. Empty locations make people not want to come.
Right.
But if you're able to keep people there and you're going to provide the financing, of course I'll refer people to you. That's where I made most of my money. And I will say that's going to be my retirement too. That's what I want to do.
We're gonna have to run this back online and offline, because when I tell you, like, I'm like, I promise you, I'm ready to go right now, like to dive into that, because I already was doing a little research on the mobile home game and the mobile home industry. I know it's money in that lane, and it's like an untapped niche right now, kind of like box truck with trucking. And so I was looking into both of those markets, but what you just told me just now, like, I'm trying to get, I'm trying to dive in like ASAP, like for real, because that's crazy. That's crazy.
I'm telling you, completely untapped market. And a lot of times people think when they look at mobile homes, oh, you know, who wants to deal with a mobile home? A lot of people.
Right.
Absolutely. And so you need to be there to service a lot of people. And then you think about it in this market. And when I was really into mobile homes and doing the the mortgage notes, the economy was okay until 2008 when they had the mortgage debacle. Okay. The difference is I was on the secondary mortgage market. So while the primary was collapsing, secondary was okay. Okay. It wasn't until 4 or 5 years later that we started to become affected because of the economy. It wasn't because of anything with our rates, because we purchased established notes. What the issue came is when the market began to decline and people were either laid off or what have you, so they couldn't afford to pay then. So when it comes to the people think that, okay, well, no one's going to want to buy a mobile home. Yes, there are a lot of people, even today, that cannot make it through that stringent credit, criteria that's required of them at a normal bank. So of course they're looking to you. When you go put a house out there for sale and tell them you're going to sell or finance, see how many calls you get compared to the one that has a real estate agent that says you got to go through the bank and get financing. You say sell or finance, people are calling you like crazy. Wow. Like crazy.
This is amazing. I'm like a kid on Christmas Eve, man. I'm just like, I can't wait to wake up in the morning. Open up the gift under the tree. Because, man, I'm telling you, the gifts and the jewels being dropped today, boy, I'm about to start calling you Miss Santa Claus, Lakeisha Scott, boy, because this is crazy. Like, for real, because, because when we first spoke about, like I said, I really, and I'm not saying I know everything, I kind of like what you said, and I just feel like I know a little bit about a lot of different things, and especially when it comes to, because I've always been a student, and I've always been able to surround myself with people who are way more established, and much more successful, and just sit at their feet and just listen, and then do my own, studying and research. And so real estate, I think I got my first real hands-on lessons in real estate, I want to say maybe in, I don't know what year it was. I don't know. It was actually after I bought my first home in 2007, but I got my start with Rich Dad Poor Dad, with Robert Kiyosaki's Rich Dad Poor Dad.
Oh, yes, I love him.
I learned the power of real estate, but also the power of being an investor. And even to the point where he breaks down the quadrant, you know what I'm saying? The 4 quadrants. Yes. So it's like, that's when I got my first, real taste of how powerful, real estate is, the real estate industry. And especially as an investor, it really just clicked for me. And I'm like, yo. So then from that point on, it's kind of like I was wide open, like with studying and learning and, researching the whole, real estate industry. So when you mentioned that, I'm like, I done heard about wholesaling. Like, it's just so, and that's what it kind of reminds me of. Your role in that reminds me of a wholesaler in a way, with traditional properties, like, because you're the mediator between the seller and the investor. So, or in wholesaling to be the buyer and the seller. But that's kind of reminds me of your role in that. But just that whole lane, that whole niche, I had never heard of it. So that's why I was just so like blown away by it when you were telling me. And I'm like, wait, say this again. Like, I don't know how many times I asked you to like really to explain it. But now, like I said, today, when I'm, in a quiet space and I can really concentrate and listen to you, it makes perfect sense. And that's what makes it like 10 times more powerful to me, because I see the value in it from a investor's perspective. It's like it's man, that's powerful. That's powerful.
Yeah, and they're making money hand over fist. I can remember, I was so much younger then. I can remember when I first got into the business, when I finally understood. It took me a minute. So when you were asking the questions, trust me, I wasn't bothered, because I know how long it took me to wrap my brain around what is it that they're saying. So we don't touch the how, it's just the note. How. You know, so of course, me being the reader, I started buying more and more books related to that. And if you, I was going to tell you, if you wanted to learn a little bit about it, it's just look up seller finance notes, and books on that. It's all kind of books. The mobile home portion I was telling you about, look up Lonnie Scruggs. Lonnie Scruggs has literally 3 books that I have read inside out. He gives you the straight up blueprint of exactly what to do with those mobile homes. And just like I explained to you, it's a lot more clear in the way that he did it. He has it broken down. There's a blueprint in there. But Lonnie Scruggs, and he passed, I want to say maybe 2 or 3 years ago, but I actually had an opportunity to talk to him. I actually contacted him and let him know I was in that business, because he was in the mortgage note business as well. But then when he came across the mobile homes and what he could do with the mobile homes, oh, it was over for him. So he ended up making millions just in mobile. So look that up, look up mortgage finance and asset managers that work with seller finance notes. There's all kind of books out there, and I wish I could think of the name of the website. It's been that long, but that has nothing but books on seller finance notes. Okay, but I was also going to tell you, at some point, if we do get an opportunity to talk more about that, I would like to be able to put it on paper, show you the calculations on paper, because that's those same calculations you can break down. Whether, let's just say that same, note holder says, yeah, I want to sell, but I only want to sell enough to get $10,000. We call that a partial buy. We can do a partial buy. There's a way you can structure that. Or if the payments are $1,500 a month, and he says, well, I like receiving the funds every month, I just have other things I need to take care of. We can even set it up to where $750, half of that payment still goes him every month, and we buy the other half. It's so much that can be done. It's all in the negotiation and that setup. How did you fashion that that deal? Partial payments. If it Colorado, Utah, places like that, they actually have notes where you pay interest payments like throughout the years, and then you have to pay a balloon payment. You can sell just a balloon payment and can continue to receive the monthly interest payments. It depends on how you structure it, but it all can be done. It all can be done.
That is powerful. Yeah, we definitely go. I'm like, for real. I definitely, because I really want to like start diving into that now, like yesterday. But I know time is running. I don't want to hold you all day, but I do want to ask if you got a few more minutes, maybe like 2-3 more questions if you got it. One of them is for the notes, because I was thinking about doing some investing in Memphis. I got a friend of mine that lives in the Tennessee area in Memphis, and he was telling me about how cheap the properties were, especially compared to here. And I might have mentioned that to you, I can't remember or not, but I was really strongly considering doing some investing in the Memphis area because the homes are so much more affordable than here in our market. But the question that I ask, or that I want to ask, is how do I, or maybe I can find it in the books, but I still ask for the sake of the listeners, how do I go about approaching or finding a person like yourself to purchase a note? Would I have to reach out to a realtor, or do you do kind of like with wholesale and do skip tracing? Like, what is the process for an investor to reach out to purchase the notes from? Like, where would I find the notes? Like, where's the note market at?
Okay, so they're leads. So there are companies out there, believe it or not, I discovered all of this. There are companies that literally all they do is scour the public records, because you buy a house is public knowledge. Well, if there is a single, buyer as well as a single lender, we know it's seller finance. Okay. So then they pull all the information they can from that note, from that promissory note. The promissory note will say who you pay, what address you're sending it to, what is the amount you pay, all that. And they literally have thousands and thousands of leads of people from the moment that they create that note and it's registered with the county, and you have the ability to buy them. To all of my clients, or clients, but all of my investors that I work with, I reach out to them first because they knew that I would be the one that would be doing the searching for them and then bring them to them. So there was this book that I received that lists all of the investors that are willing to buy seller finance notes. And over time, you build a rapport with them. So there was one company, Interbay Funding, and I think that they're now Pinnacle Finance or something, but Interbay Funding. There was a guy, Eric, that I worked with. I got to know him there. And anytime I came across a note that fell within their parameters of what they will purchase, he was the first person I would contact. So you would literally just get that book or do research to see what companies are buying seller finance notes, reach out to them, get to know them, let them know you're in the business, and they will literally tell you from there, how do you get stuff to them? For me, most of my asset management companies or the investment companies, there was a form that we used. I would fill out, give them all the specifics of what I knew they needed. I would fax it over to them. The only thing they would do is fax back a number and tell me, here's what I can pay, or here are the options. And then would literally tell me from there, you go from there. They're letting me know, let's just say that same $100,000 note, they may say, okay, we'll pay 90 cents on the dollar, closing costs are, or we'll pay closing costs, or they may say closing costs are incumbent upon the note seller. Then I would take that 90% on the dollar and maybe talk to that note seller and say, hey, they may have told me that they will pay 90,000, but I will tell them they'll pay you 85,000. Okay, and because I was aware of what the closing cost is typically going to be, depending on how much it is, I would say I'll pay closing, or 85,000 plus you have to pay for closing. Okay, and then once we do that, they don't care how you structure the deal. What they care about is making sure they get the deal. So my commission would go from maybe $1,000 to my highest commission was like 17,000. It just depends on how you structure the deal. That's the beautiful thing about owning your own business and really, really knowing it, knowing the rules and then playing the game, because there will be times that I knew that I would be traveling, or I knew I was doing something, but I would still be able to close that deal with them because literally get this, as a mortgage investor or the liaison for them, most of my work was done in the beginning when I would have them send all the documentation to me after they've agreed. If I've gotten into the yes, so send me your promissory note. And so 9 times out of 10, I would always already have a copy, because as soon as I find out what the address is, I went to that county and I pulled all the information I needed, so that when I gave that file to the investor, they didn't have to ask me any other questions, but give me the number. That's it. So in the beginning, I get all that information. Once I give everything to the investor and we sign everything, they are literally doing everything from there. They contact you in 2 weeks, 3 weeks and say, hey, are we doing a dry closing? Meaning no one shows up, you just everything's through fax or email or what have you. Or are we going to go into and pay for that? Okay. A couple of days later, they go to closing. I receive a commission check. They receive their note. Literally 2 to 4 weeks. The only time it went longer than that is if we found out there were clouds on the title or something came up in the midst of doing our due diligence that we had to have a conversation about. And even with that, they're so motivated at that time to get their money, they'll do whatever they need to do to get to that closing. Wow. Absolutely. So to answer your question initially, you need to get leads. And the leads, put it this way, I think I may have paid back then maybe $200 or $300 to get like 5,000 leads, and the way that I would market, you would typically, if you're going to market, using like postcards and stuff or letters, there's like a 2% return. So you literally, as long as you have the means to take care of the stamps and the postcards, like Vista Print, something like that, you knew that if you sent out, say, 1,000 cards, you knew you had maybe 200 responses, but then out of the 200 responses, you'll probably close on maybe 10 to 20 of them, over time. Right. But you knew that. So it didn't matter that you had to pay the money to get the leads and then pay for the stamps and things like that. But that's how you get that's how you get into that field. That's how you find out who's selling the notes. And then you also learn about other investors that are buying the notes. Because if I'm talking to Interbay Funding may refer me to Boston Note. Boston Note might say, this is not mine, but I got a guy, Troy Fullwood. I think it was Fullwood Lending. They would say, hey, try him. And after a while, you have your own circle of investors. And you only work with notes that fall within that parameter. So you know it guarantees the sale.
Right. Wow.
Yeah.
That's crazy, man. So I got two more. I got two more quick ones, and then I ain't trying to like. I'm just giddy, man. I'm just all geeked up. But the other question I have, well, I'll go with this one first, because like I said, my wheels were spinning while you were speaking. So the other question is the legalities of it, the legal standpoints. What would be the approach in terms of, because I know when you're dealing with this type of investing and you're dealing with homes and properties and real estate and all that, what are the legal parameters that an investor would need to take in terms of protecting themselves with, whatever could happen if, let's say, the person defaults? I know you said you can take the home. Can you kind of get into like what happens in those situations? As well, first I'll start with how should you prepare yourself in terms of protection with legal representation, and then what are some of the scenarios if and when a homeowner defaults on the payments?
Okay, so definitely LLC, some level of protection, over you have that separate. And a lot of times, some of those investors literally would do more than one LLC, to prevent, because you protect each LLC that you have, and you put something in that LLC, you can go after this one, but you can't touch these other ones. Okay, so LLC to make sure you're protected. Now, there's a couple things that you can do if the seller defaults. It depends on how the deal was structured. You can do with or without recourse, and I want to make sure I'm saying them correctly. So if it's with recourse, then that means that if that note defaults, what you're saying is, as the seller, that I can come back to you and tell you that person that's living in the house is not paying their note, and I need to be coming for you to make sure that payment is made. Gotcha. You do without recourse, that says, hey, once we sign on the dotted line, that note seller, they're no longer involved in it at all. You can't go after them for anything. Gotcha. Okay. When it comes to that, the homeowner, the person living in the house is paying the note. If they begin to default, like we were mentioning before, those little telltale signs when it's due the first, they're starting to pay 15 and 20, and it keeps going that way. The best thing to do off top is to contact them and ask them, is there anything I can do to assist you? Do we need to restructure the deal? Because at that point, you're in a position where you're talking straight to the person making the payment. At that point, you can redo that note. You can restructure the note and make it to where if the payments are too high, then maybe we can decrease the payments, but I'm probably going to change that, either makes a portion of that, go to the back end, or like do a skip payment, or I may adjust that interest rate, but make the term longer. Okay, so maybe I add on 2 or 3 additional years. But overall, it's the communication. You need to be in contact with them and let them know that you're willing to help them. Now, if all else fails, and even in that case, it does not help, and they still end up being late. We've had many, homeowners that just didn't pay. At that point, it's no different than you would do with the regular house. They don't pay. You file, something with the county saying, hey, they have not been paying. Here's the proof. Here's what they did pay. They stopped on this date, and then you go through the normal proceedings to either get them to pay or you take that house back. Gotcha. Yeah, and then of course you take the house back, depending on how much either they paid or don't pay, or what you can get in that lawsuit. The remaining amount is still there. So do you get a judgment against them? Some, believe it or not, there are some investors that won't even take that route. They will say, let's do a deed in lieu of foreclosure. So instead of us even foreclosing on you, just give us the house back. We'll walk away with what you paid us, and 9 times out of 10, if they're going to offer you a deed in lieu of foreclosure, they've already reached their break-even point. They're not even going to spend that extra money to get you sued. It's not that important to them. What's important is to get you out of that house, and we need to get somebody else in it.
That is so
Yeah.
dope.
Yeah.
Oh man, I love it. I love it. I love it. I love it. Okay, so the two last questions, I promise, because these are two episodes. The first one is separate from this one. These are two different episodes. But and I'm gonna edit that part out. But so I know that it's for investors, but I'm wondering for, let's just say, for people who now know about this niche or this opportunity to invest, are there lenders out there who will lend to an investor to go out and get to buy a mortgage note?
Oh yeah. Oh yeah. There's plenty of the investors that I work with that have open lines of credit. These are people that understand the art of, using other people's money. Leverage. So once you get to the point where you have some skin in the game, you have some seasoning in being an investor, you can definitely reach out to a bank that's willing to give you, a line of credit to where if there's repairs that need to be done, you can assist with that. If someone says you do find a note and you have to give them a lump sum of $80,000, they will provide that for you because you've more than shown that you will receive those payments and you will pay them. Gotcha. As long as they can see that track record, you can definitely get a loan and use their money. Use their money to get. And when the mobile homes, definitely use somebody else's money, because you're talking about walking up to a mobile home park and saying that I'm going to buy. You need to be able to have that 5,000 available, that 10,000 available to go ahead and cash them out. Pay them and get them to sign. And another thing about a contract, you could literally take a sheet of paper right now between you and I could say, here's what we have agreed. Blah, you're gonna pay, I'm gonna pay you 10,000, you're gonna pay me $500 a month, put two lines right here, you sign, I sign. That's a contract.
Yeah,
and that's what my scrub says. You're right, and yes, and then you go get registered, definitely, get it filed. So in case there's any liens, they don't, end up being subordinate to those liens. But yes, you can do that. And then let them have an agreement of when those funds are gonna be paid and when they're gonna be out. Wow. Absolutely. And of course, getting paid is contingent upon you getting out. So we have a contract that says that I'm going to buy that mobile home from you for $5,000. I need you out of the mobile home first. Right. Okay, because we're not going to deal with these squatter type issues. We need to get out first, then you get your check. You see how quickly they get out that mobile home. Wow. Absolutely.
Unbelievable. Absolutely. Okay, well, last question. And I promise it's the last one. I know the homes, traditional homes, mobile homes, which like I said, I'm definitely trying to follow with you ASAP to get into that. But the other one is this something that's also doable or possible with land, with just actual raw land? Is that possible, or how does have you ever heard of or dealt with that aspect of it?
Yes, and especially Colorado, places, Utah, where they have a lot of land. Yes, there's a lot of land contracts that are being done. The only thing about land is that you then run into whether is it a land that has already been developed, meaning do they have the lines running through it? Does it have what's it, plumbing and stuff like that? If it was land, then you have to go through EPA also. Because if we find out there was a gas station, then we need to know, has everything been cleared? Has everything been, are there any toxins and stuff like that? So land can definitely be done, but you're dealing with a whole different beast. It's just other parameters that, go along with that. But yes, land deals are being sold left and right on the secondary mortgage market in places like Colorado, Nevada, places like that where there's a lot of land. Yes, absolutely.
Wow. All right. Yeah, that's
most of the time. I will say they want the land to be developed, though. They want it to already have everything in the land, the wires, all that.
Okay. Yeah. Wow, this is amazing. Okay, yeah. I think that that'll wrap up what I got for this. But this was I thought the show I did yesterday was crazy. Man,
you get to get all the first-hand information. You get all of that.
Listen, it's so funny. I was just saying yesterday, I was talking to my wife. I was like, when I'm in these like, this is like my wheelhouse, man, because as I'm listening to people who are experts in their field or, their niche and their lane, what they do, I'm somebody who loves to learn. I'm sitting there listening, and then my wheels are turning. So it's like, I'm asking all the questions for somebody who's never heard this before, that wants to know and needs to know. so they can actually apply this and get started, including myself, especially with this one. So it's like, I gotta ask the questions because I don't make nothing more than $100 purchase without knowing, doing research, getting reviews, reading reviews, etc. So it's like when you're talking about investing, you definitely want to be, you want to cover all the bases to make sure that you're coming in as knowledgeable as possible. So this has been amazing. I definitely appreciate you, Miss Scott. It's been an amazing show. Can you kind of let the people know how to reach out to you, like how to, if they want to, investing in your products or services as far as the bookkeeping, coaching, consulting, like whatever, products and services that you offer. How can the people watching or listening, get in touch and reach out to get with you on that?
Okay, well, there's a couple of ways. Definitely my website, www.hiddenvaluesbk.com. I have articles out there that I've written, and of course, all of my services that I provide. Some of them does require that you contact me because it's like I mentioned before, taking your car to a dealer, to get service, but you want to know right away what it's going to cost. I need to know more information.
Gotcha.
You can also email me at info@hiddenvaluesbk.com. I also get a lot of leads through Thumbtack. So all of my reviews, very high reviews, kind of let you know how it's worked with a lot of the companies that I have partnered with. When I work with people, it is not, you're just another number. I work with you to learn your business inside out so that I can give you the feedback that you need. Outside of that, and then my number, of course, is 813-756-7557. I'm typically in this office from 9 o'clock in the morning to 5 in the evening, sometimes well after that, depending on what projects I'm working on. But services I provide, bookkeeping, reconciliations. If you want monthly, bookkeeping ongoing, I do that. I do have some clients that I only work with them every quarter. I just update them every quarter, and they pay every quarter, instead of every month if you can't afford it. I definitely, register your business. If you need to form an LLC, I make sure all those things. There's packages. If you look online on my website, there are packages where I'll bundle a lot of services together just to get you. When we talked about that financial foundation and the business foundation, both of those are out there in a bundle so that they can, get access to those things. Yep. And anything else that an accountant does, I do that as well.
That's what's up, man. I appreciate it. I'll drop all the links right on down in there. And then that way, anybody who watches it, who's interested or who may need, your products, goods, and services, they can just click right on the link underneath the bottom of the description and the keywords and notes of the show. This has been amazing. And I definitely appreciate you taking the time and then just all the knowledge, all the jewels and all the sauce that's been taught today. So I look forward to doing it again, and I'll definitely reach out to see about the investing with the mortgage, the mobile homes and all that, because I really want to get into that. But
okay, definitely, and thank you for letting me come on. I'm so glad to know that, I know there are people that are doing this, but I love to be a part of something like this because I'm hoping that the information that we share with one another, because it wasn't just me, that we share with one another will be the catalyst to someone being great, knowing that they can step out there too, and not allowing whatever their environment, whatever their background was, to stop them from being all that they can be. Just come fully into who you are. And platforms like this reminds people that they can come fully into who they are, regardless of what their life has been like or what their life is now. You can always change that. You just have to make a decision. That's all.
That's fact.
So thank you.
No, thank you, and I really appreciate you. And I'm all for it, man. Because like I said, it's bigger than me. It's not about me. It's about we. And I just really want to do my part with just giving pouring intellectual libations, in honor of our.
All right, I like that. I'm gonna have to steal that from you. Intellectual libation.
Yeah, man.
There ain't nothing wrong with
that. Yeah. So that's what it's about. So I definitely appreciate it, and I'm looking forward to building and making some power moves in the future.
Absolutely. Okay, we'll be in touch. All right.
All right, you have a good one. So, all right, ladies and gentlemen, this has been another episode of the Prolific Perspective Podcast. I appreciate all y'all for joining us. If you could, please like, share, and subscribe, and we will be back next week with another show for you. I appreciate you, Miss Scott. You have a good one.
Thank you. You too.
Okay. All right, peace, y'all.
All right.